Portfolio Management Director at Morgan Stanley, joins us now. Jim, not going into Europe for investment anytime soon?
Yeah, I mean, it fails almost every test you could give it. I mean, first of all, Europe fails the sixth grader test, which is look at the chart and tell me, is it going up or going down? It has just been trending down, as have most global markets. Second test is what is the central bank doing? And the central bank in Europe, despite a very obvious move towards recession in Europe, is very, very aggressively hiking interest rates over there. The biggest problem, though, isn't either one of those. The biggest problem is what's going on with energy there. European countries are facing a 200 to 700% increase in energy cost. They're already having to shut down businesses, whether it's steel factories, whether it's aluminum and fertilizer companies, and they're really worried they're not even going to be able to heat homes during the winter. Now, these countries are going to stimulate to try to offset these costs, but that might be inflationary as well. As we've seen, a lot of the stimulus around the world has been inflationary. So they've got a real serious problem over there. No pro-growth policies, an aggressive central bank, and runaway winter heating costs that aren't really changing. I mean, Putin hasn't softened his rhetoric at all and has suggested that they're going to have a very, very difficult winter. So this is not an area where I would want to be.
But the DAX is the German stock market. It's already down 20% from the highs, and the euro has collapsed below parity to the dollar. I guess what I'm wondering is there anything that you just said that investors don't already know, or are you just saying it's mispriced?
It's a very good question, and you could say that about just about any market in the world, but we haven't seen any sign yet, Sarah, that any of the central banks are ready to have weak knees or to buckle here, whereas over the last 20 years they always have. In this case, you still have interest rates that are negative, meaning real interest rates that are negative, meaning the inflation rate over there and over here, for that matter, is still much higher than interest rates. And that creates a major, major problem for those central banks. And so I don't think we're going to see the knees buckle on these central bankers until at least you see real interest rates turn positive. And if you listen to their rhetoric and you look at where inflation is, it feels like we're a long way away. Now, are we in the first inning or the eighth inning or the ninth inning? I think we're probably somewhere 6 or 7. I think a lot of the move has been made. I just don't see any signs of a major bottom yet or any policies being implemented that would suggest that we're going to have a bottom.
So what do you do about U.S. stocks in this environment this dire environment that you just painted? Do you stay away because of the exposure and the spillover, or you go in as an alternative?
Look, normally I'm a really optimistic guy, but the bottom line is the U.S. is probably still the prettiest horse in the glue factory, which means I don't really think that we're done yet. I think we have more of a bottoming process to go through, but I'd still rather be here. And I think that's why you're seeing the dollar rally so much as well. Our countries are doing our companies are doing much better than their global counterparts. They're going to be negatively impacted by a strong dollar. On the other hand, it does mean money flows into the U.S. And as you mentioned, money's flowing out of Europe. So what do investors do? I think they be patient and they wait to see some signs of a bottom in the market. All we're seeing right now is a lot of volatility. These rallies have had major short covering components to them. And so I think you can't trust them. As the last time I was on, I said, this looks like a bear market rally to me, and it still does. So I think investors just be patient. We're entering that time frame of year, Sarah, late October through April, that the market does tend to do better. But September and early October historically have been very choppy, very volatile, and I just don't think we're done yet. Haven't seen the washout, haven't seen a spike in the VIX. We just haven't really seen enough signs of a bear market bottom yet.
Jim Lacamp, thank you for joining us.